time that you're kind of going over it sometimes can be difficult. So I was like, let me record. Let me see if the brother's okay with me recording it. So I'm hitting the record button right now. It's setting up a couple of more seconds. All right. That you're kind of going over it sometimes can be difficult. So, all right, perfect. So we got that. We're recording now. Perfect. So you can always go back and check this out. So yeah, like I say, I really, really encourage you, my brother, to take some time out. And like I say, there's 229 of them. You may want to go hard and, you know what I'm saying, knock them out within a week and really, 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 you know what I'm saying? It may take you 2 weeks, you know what I'm saying? It's up to you, you know, and how fast you really want to just have a better understanding of everything that you're involved in when it comes to this space. So I really just want you to definitely go over these terms and really, really, like I say, if you read something and you don't understand the word, look it up so you really, really understand the definitions. And I really promise you that it's definitely going to help out. Words like 52-week low, that's something you definitely want to know as far as like in the last 52 weeks, you know, what's the lowest a price has been, you know, 52-week high, you're going to hear that a lot, you know, where has this price been in the last 52 weeks? And of course, 52 weeks means a year, of course. There's 52 weeks in a year. After hours trading, you know, there's some, like you were saying, brokerages like Webull. I know is one of them that allow you to do trading before 9:30 and after 4 o'clock, because the stock market is one of the stock market closes. It's open Monday through Friday, 9:30 to 4. So of course it has an open and a shut time. So this right here, this term applies more so for it. The Forex market kind of opens up really, really early in the morning. I forgot the exact time, but in US or New York time, let me look it up right now, as a matter of fact. I don't have to guess. All right, so it says the Forex market is open 24 hours a day in different parts of the world from 5 p.m. Eastern on Sunday until 4 p.m. Eastern on Friday. So that's what it is. Because they've added cryptos to the Forex, because the Forex used to close, but they've added cryptocurrencies to the Forex market also. So not only can you exchange cryptocurrency on the cryptocurrency market, you can also go on the Forex market and exchange cryptos. Hence the reason why it's open at least Sunday through Friday. You know what I'm saying? So it's not open on Saturdays as you can see, but it is open from 5 p.m. on Sunday until 4 p.m. Eastern on Friday. So it definitely is closed all day Saturday, or really technically after 4 o'clock on Friday, all of Saturday, and of course before 5 p.m. on Sunday. When it comes to the crypto market is 24/7, weekends, holidays, Christmas, you name it, it's always going, it's always working. So a lot of traders like to try and make money on a daily basis by going to the crypto market, or like overnight. Sometimes I keep hearing like at 3 o'clock in the morning or something like that is like a really good time to trade and make money, because maybe like in another part of the world where it's 3 o'clock to us, but another time it could be like prime time in the daytime for them or something like that. So they could be really trading at that time. So just keep that in mind. I just wanted to make sure I went over all the 3 markets, you know, when they open, when they close, and how the information can affect and how you can use it to benefit yourself. Definitely a couple of more on here that are definitely really, really important that I want you to really, really understand. Of course, you do have a little bit of knowledge, so you understand the bear market and the bull market, right?
Yes.
Okay. All right. Perfect. So yeah, like I say, just take your time, or take the amount of time that you want to use towards this and like really, really try and, you know, even if it's just, hey, you know what, pick a day that you're off and just literally like, okay, you know what, I'm gonna go through all of them today. I'm gonna read the term and the definition. I'm gonna read it today. Or, you know, I'm gonna read 10 of them today and I'm gonna read those 10 3 times so it can lock into my brain. You know what I'm saying? I definitely would suggest if you read them or read them at least 3 times to yourself. That's like a magic number when it comes to trying to remember something. So just keep that in mind. So yes, like I say, this is really, really important. This is going to get you started. So once you start diving into more videos, those videos will make sense because you'll understand every word that they're using. You know what I'm saying?
Yes.
So like I said, I really think that that's going to be important. The next thing that is really important is your mindset. And really your mindset is more important than the terminologies. But I just like to present it. I just like to present the terminologies first, because if I start using words and you don't even understand them, we won't be able to comprehend each other. You know what I'm saying? So that's the reason why the mindset, as I'm teaching it. Second, overall, it's very important because you don't have to know anything to be an investor or to put money in. You don't have to know any word or anything. But it is still in your best interest to have a good mindset while you're in it. You know what I'm saying? If not, a person can lose their money very fast. So what I wanted to do is watch this video real quick. It's like 10 minutes long. It's a really good video though on mindset and a couple of rules. They got 7 rules. I like to follow those rules. I like to get other people to. And as you can see, it's on YouTube. So I don't, maybe you want to jot down maybe the title, you know what I'm saying? And the actual page or the channel, The Secret Mindset. And then you know, maybe later on you may want to watch it again, or other videos that they may have, you may want to check it out. But I just want to check it out real quick. It's only 10 minutes, but I really want you to hear this because it's really important, my brother. All right, let me know when you're ready.
All right, I'm ready.
Perfect, perfect. All right, and
Possible to trade or invest and not find yourself into a losing position. That's just the way things are. And a large trading loss can be devastating. It's impossible to trade or invest and not find yourself into a losing position. That's just the way things are.
can you hear
And
it
a
and
large
understand
trading
it?
loss can be devastating,
Yes.
Okay.
not only financially but emotionally. As defeating as losses feel, how you react to a big loss is more important than the loss itself. Inexperienced traders suffering a large loss can become hijacked by their emotions.
Right.
Some may try to trade through the pain, often creating more turmoil for themselves. Some may withdraw from the market to avoid thinking about it. Others may try to trade in revenge, determined to recover the losses. None of these reactions are constructive.
Right.
In fact, they can be destructive if you don't learn how to handle losing trades.
That's real.
Whether it was an obvious minus in your strategy, a lack of discipline, or any other reason, nearly every trader will face a big loss or several in their career. After a losing streak or a big loss, you may begin to question yourself, which leads to the typical problems many new traders have, like getting out of trades too quickly, holding on to them too long,
Right.
skipping trades with the fear of losing, or getting into more trades that you should in an attempt to get some winning trades. One major difference between successful traders and failed ones is how they handle trading losses. Successful traders treat losses as an opportunity to learn and improve their trading.
Right.
Coming back from a large loss is challenging, but success is never accomplished by ignoring trading losses. Losses, especially substantial ones, can be opportunities to become a more skillful trader. Here are 7 rules successful traders take after a loss to become emotionally stronger and more disciplined. First rule, never let a bad day cost you more than you make on an average win day.
That's real.
Knowing how to lose properly is a must in a long and prosperous trading career. If you average, let's say, $200 on your winning days, don't lose much more than that on a bad day. Control the downside. Knowing how to minimize risk is the most important aspect in trading. There are
Minimizing
really only
risk.
4 possible outcomes to trade or invest: a big win, a small loss, or a big loss. As long as we eliminate the big loss from our trading days, we can live comfortable with the other 3.
That's real.
Risk management is the primary cause for a successful or unsuccessful trading experience. A sound risk management can yield a steady increase of profits, while a poor risk management can wipe out an account in a very short period. If you follow the 1% risk per trade rule, a precise stop loss level resets that 1% value, and you'd know beforehand the amount you risk losing should your trade turns negatively. And this goes hand in hand with the second rule.
Hey everybody, Micah here, and I'm so excited for the special workshop I'm hosting. I recently just got this.
Know your stop loss level before
Yes.
you ever get into the trade. The stop loss is a simple tool, yet so many traders and investors fail to use it, whether to prevent excessive losses or to lock in profits. Nearly all trading styles can benefit from this trade. Think of a stop loss as an insurance policy. You hope you never have to use it, but it's good to know you have the protection should you need it. So always use a stop loss and know its location before you ever get into the trade. Also, never widen your stop losses when the market moves in the negative territory. Know that regardless of what happens, there is another trade around the corner.
Right.
If your trading strategy relies on the success of one single trade, it's a very bad trading strategy. Remember that trading success is the accumulation of many successfully managed both winning trades and losing trades. Number 3, don't involve in revenge trading.
Yes.
A big loss causes all sorts of inner conflict, a need for revenge, fear, anger, frustration, self-hate, market hate, and the list goes on. After a big loss, there's no way to trade with a clear head. There are more than 250 trading days in a year, so there is no rush to get back in there. If you do so, you basically revenge trading.
Right.
Rather than looking to your strategy and make sensible decisions around the incident, you jump straight back in. This is
Right.
dangerous for your account for 2 main reasons. First, it forces you to throw your trading discipline out the window. It shifts your focus from your trading process to trying to make enough money to recover your losses. Trading based on emotions and luck is not trading, it's gambling. It's also a lose-lose situation. If you lose a revenge trade, you increase your losses even more with a trade that you had barely planned for. If you win, then you believe that trading on guts and emotion works and you're going to do it again.
Right.
So don't do it.
Don't do it, brother.
Number 4, accept responsibility. If you suffered a large loss, be sure to own it. Don't brush it aside, hide from it, or blame the smart money from your loss. There is always an excuse for a losing trade, but as traders and investors, we must accept the risks. Until we accept that we are responsible for whatever happens with our orders, the same thing will happen again. Accept responsibility and figure out what could have been done differently. This will help reduce the chance of occurring it again. It is also healthier than blaming other factors from your mistakes. Blaming others is admitting that you don't control your own trading. And if that is the case, you shouldn't be trading at all.
Right.
If you control your trading and investing, then you can fix it. And it's always something that can be done. It may involve changing markets, changing your strategy or your trading style. If you find that scalping the 1-minute charts bring you a lot of losses, then try swing trading. The solution is there. You just need to find it. Number 5, stop trading for a while. Sometimes it's better to take a break to figure out what went wrong. Do those things so that you can get back to a better mindset in which you can refocus. After that, assess what happened by reviewing events carefully. Think about where you fell short. For example, did you take too much risk? Was the trade well planned? Were you mentally sharp? Or did you hold a losing trade hoping to avoid a loss? Taking a break from trading is one of the hardest things to do, but it's a smart move. Wait for the conditions to improve. Preserve your cash, save your sanity, and focus on other things. When the conditions improve, so will your results. Remember that market will not disappear tomorrow. Nothing terrible will happen. On the contrary, during this time away from charts, you will likely come up with new, better ideas on how to improve your trading. Number 6, trade lower position sizes. After a big loss, confidence can be low. Not having a clear mind can cause you to skip trades, panic out of trades, or be overly aggressive. None of these things are good. Take a step back and trade in a demo account for a few days. Because it's not real money, there is also less pressure in a demo account. So it's easier to focus on trading and not worry about the financial aspect of it.
Right.
A few winning days in the demo account will raise your confidence levels and put you in a better mental space to take on the markets again with real money. So after a losing streak, start small. Don't jump right back to the same position size you were trading before the loss. In the first days back, trade small position sizes. A winning day with a small position size will help build confidence, and you can slightly increase your position size as the account balance goes up. If you have a losing day, losing on small position sizes is easier to handle than another losing day on full position sizes. Even if you win a few days in a row, increase your position size incrementally so it takes about a while to get back to your full position size. I know that after you have traded bigger position sizes, it's annoying to start back with a small position size, but it's
It
for the
is.
best. Bouncing back from a losing streak is about getting back to basics and implementing a strategy well, not actually about making money. Money comes from implementing a strategy well. Demo trading and trading small position sizes gets you refocused on what's important so you can start building your confidence again. Number 7, and probably the most important one, let go of the outcome and embrace the process. Realize that trading is a continuous process of learning. Most of the times in trading, like in real life, you learn more from your mistakes than from your victories. Losing money should motivate you to look closer at your actions, read more, better educate yourself, become more disciplined in your execution, and so on. Next time, you will have a better idea of what happened and where you went wrong and can open up room for improvement and start stacking the odds in your favor. As cliche as it sounds, putting your focus out of making money and into enjoying the process will keep you on the right track and you are more
Yes.
likely to end up in profit.
Enjoy the
If you
process.
learned something new and found value, give us a like to show your support. Subscribe to our channel and hit that bell icon to stay in touch with me.
All right, perfect. So what do you think, brother?
I feel like all those points were really, really like valid points and stuff you really got to keep in mind while trading.
Right, right. Have you ever like placed a trade before? Just asking.
Yeah, I placed a couple.
Okay, okay. How was your results?
I've had some really good wins, some bad losses, but whenever I take a loss, I just take a step back, review everything, and then wait until like the next big thing comes.
Right. So you're already like performing one of the rules or two or three of the rules already, right?
Yes.
And which is good. It seems as if the rules are kind of like common sense a little bit, but they're only like common sense if you have control of your emotions. Like this is like I've learned in this game, like last week, to be transparent with you. Last week I where was it? last week I had an $11,000 day. You know what I'm saying? I made $11,000 in one day. That can really, really do something to your emotions. You know what I'm saying? So we definitely have to make sure that we control ourselves on the wins and the losses. Like I was explaining to somebody and they were like, you made $11,000 the other day. You don't really even seem like you did. Like, you know what I'm saying? That's because I just been kind of staying low key and, you know what I'm saying, not trying to get too up on it. You know what I'm saying? Because I just got to control my emotions. If not, I can mess up. What I had, this particular company right here, CYBL, I bought 1 million shares of them. And it went up to like 11, 12,000 or so, 12,000. So I sold 900,000 of them. That's why I only have 100,000 left. And I was able to profit off that 11 grand. You know what I'm saying? So like it can really, 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 really quick, my brother, get really, really, really emotional. You know what I'm saying? Like good or bad. So that's why I wanted to go over the mindset video and talk about it, because I definitely understand and realize that our emotions play a really big part. Like soon as I cashed out, I was like, shit, I want to put more money in. I want to, you know what I'm saying? I want to take the whole 11 and now put it back on one trade. You know what I'm saying? But it's like I can't. Emotionally, I shouldn't be. I couldn't. Fundamentally, I shouldn't be doing that. How about that? You know what I'm saying? Like fundamentally, I shouldn't be doing that. I should wait, take a little bit more time, do a little bit more research, find out what's going on. But when you make that type of money, it kind of like the video was saying, it'll make you throw your whole playbook out of the, you know what I'm saying, out of the window, you know. So that's why I really, really like this video, man. And I think it's going to really, really help you. It seems like you already have a really cool and mild-mannered personality, which is really good. If you're able to control your highs and your lows emotionally, then you'll be successful in here. What do you think what he was talking about as far as like managing your loss? You know what I'm saying? What do you think about that?
I feel like that's one of the most, like, I feel like most beginners look over that, like look past it. And I feel like
Right.
That's one of the most important factors of trading is your mental game, because if you have a weak mindset, you're basically gonna lose every trade and you won't know how to recover.
You are correct.
A big loss.
That's real. And one of the other things is, and like you say, that most beginners is because they don't understand that you should come into every trade not thinking that you're going to lose, but preparing just in case there is a percentage of money that is being lost that you pull out. Like every trade that you're in, and when I use the term trade, I'm more so talking about like contracts, option contracts, or like day trading or even swing trading. You know what I'm saying? If you found an asset, be it a good stock or good crypto, and you're like, it doesn't matter, I just bought some, it doesn't matter if it goes down 30%, I'm gonna still hold on to it. This is a really good play. I've done my due diligence on it. This is a really good long-term asset. I'm not gonna sell it even though I've lost 30% on it, 40% on it, because I've done my research. And I just may have gotten in at a bad time. And with the market being unpredictable, I don't want you to fault yourself for that, because the market is unpredictable. You know what I'm saying? You don't know when it's going to go up and go down, kind of technically. So definitely know the difference. If you're trading, meaning you're trying to make some short-term money, or you're short-term trading, you're day trading or you're swing trading, always have a percentage that you're like, okay, you know what? I'm going to put $100 in. I've done my research. I've looked at the patterns. I paid attention to everything. I'm not going to take anything. I'm not going to lose more than $30, which is 30%. You know what I'm saying? That sometimes is mine depending on the asset and how I paid attention to its volatility on how it goes up and down. It could be 20%, it could be 10%. Whatever you feel comfortable with saying, okay, you know what? I don't want to lose no more than that. Always set your percentage, my brother. All right. You still with me, man? Look like you're on mute.
Yeah, I disconnected.
Oh, okay. But did you catch the part where I was saying always have your percentage that for your stop loss?
Yes.
Okay, perfect. Now watch this. Also have a percentage for your profit. And maybe you heard the guy saying sometimes people stay in trades too long. You know what I'm saying? And that's because they haven't actually decided their price point or their percentage on, hey, I'm getting out right here. I got my 10%, I got my 20%, I got my 30%, I'm out of there. You know what I'm saying? And it doesn't matter if it goes up anymore. I'm not going to beat myself up because I was successful. You see what I'm saying? So also, as you have a trade as you have a stop loss for it going up, also have a stop loss for it going down. And that's so you can make sure you lock in profits. Locking in profits is so important. You know what I'm saying? So important because as you can see with this asset right here, this is just a cryptocurrency that I was looking at. But as you can see on May, down here, it'll show the date. On May the 8th, this thing shot up. On May the 9th, it shot up. On May the 10th, it shot up. On May the 11th, it shot up. And then on May the 12th, it shot down. So it's not going to stay up there forever. You see what I'm saying? So you have to, at some point in time, lock in profit, you know, especially if you got it down here, you know what I'm saying? And it's just running up. I know sometimes we, of course, mentally and emotionally and financially, we want to capitalize on all of this. You know what I'm saying? We want to capitalize on all that green, right? But sometimes waiting, what is this, 1, 2, 3, 4 days in a trade? You know what I'm saying? That's a lot. That's diamond hands on trading. You know what I'm saying? And it can just be tough sometimes and very stressful. I'm not going to lie to you. It can definitely be a little stressful. Like, what should I do? What should I do? Should I sell? Should I let it stay there and keep riding? You know, so it definitely has a little anxiety that comes with it. And that's why really, really controlling your emotions, having a strategy, sticking to your strategy will allow your emotions to be under control and not just everywhere based upon just the up and down of the market and the prices. So just keep that in mind. Revenge trading. What do you think about revenge trading, man?
I feel like it's just reckless behavior. Like at that point, like you're trying to get back on your losses, but there's still a risk that you could lose even more than you lost in the beginning.
Right. And like you say, no, and normally, because you're revenge trading, there's a form of emotion that's attached to it now, and that emotion could block out fundamentals. That emotion could block out strategy. You know what I'm saying? So people sometimes, as I talk about it, and I've taught other classes and other individuals, they're like, damn, it's like I gotta be a robot. It's like I gotta not be human or emotional. And it's like, I don't want to say that that's the case because, of course, it's impossible in a sense to be, but you just have to really, really control your emotions. If you can find a way to really, really control your emotions, you won't get swayed when somebody comes up to you and say, hey, man, this one asset right here is going crazy. You should get into it. And if you don't have your emotions in order, if somebody comes to you and they're really excited, they have a lot of good energy, and they're like, hey, you should get into this, you may get into this. You know what I'm saying? Versus saying, okay, I'm gonna check that out. I'm gonna do my research on it, and I'm gonna see what's going on with it. You feel what I'm saying? That's more of a better response and a non-emotional response to that particular scenario. So just like I say, manage your emotions, understand that if you get in the trade and you're not as successful as you want to be for whatever reason, like the video says, number one, have a stop loss, find out your percentage. Okay, I've lost 10%, 20%, 30%, I'm gone. You know what I'm saying? And now, okay, boom, like the video also said, let's start now assessing what went wrong. Did you go through your checklist of fundamentals that you go through for every trade that you go through? You know what I'm saying? If you say yes, okay, boom. Did you check the, you know what I'm saying? Did you check the chart? You know what I'm saying? Did you check the catalyst information as far as like any news reports on this asset and something coming out, and that was the reason why it didn't go in the direction that you were hoping for? You know what I'm saying? Just step back and assess everything, find out what you did different. That's normally something that you don't do, or, you know what I'm saying? Find out what you didn't do, but make sure after a loss, instead of beating yourself up, let's just find a place to get better. You know what I'm saying?
Yes.
Did you play any team sports, man?
Yes, I play basketball.
Okay, perfect. So you guys, after a game or maybe throughout the week of practice, you guys have maybe watched film and stuff like that?
Yes.
Okay, so same thing. So say like you guys, you know, unfortunately played a team and they were really good and you happen to lose. You know what I'm saying? What would you normally do? You and the coach and the team would normally do after that? Watch video on it, maybe the next day or something like that. You know what I'm saying?
Yes.
So that's what I look at as anytime you do happen to lose, step back and like cut the video on, go check through everything and just make sure that you went through all your fundamentals and just see what was wrong and just see, hey, you did everything that you normally do to be successful, you just weren't successful, and then have understanding about that. Don't beat yourself up. Sometimes it's just the market trying to be predictable trying to be unpredictable, because you got to remember, where's it at? Order panel. Let's see. Okay. Right here, these are all the orders. Let me see if I can find one a little bit more hot. Okay, boom, there we go. These are all the buy and sell orders. You can check them out on tradingview.com. So when I say the market trying to not be predictable, this is a computer that we're using, right? This is an algorithm for all the different brokerages now. There's no more of calling a brokerage like they used to do back in the day and say, okay, man, you trying to get 100 shares in Tesla? Okay, boom, I'm gonna write that down and put that in for you. That process is not in anymore. The process now, as you can see, is all digital. So you have to step outside the box and be like, well, hold on. If the computer is controlling when my money goes in on the trade, and the computer is controlling everybody's trade by putting it into the pot, will the computer ever try to delay it to make it seem as if everybody has a really good idea and everybody feels like they know that a stock is going up and the market sees that everybody's trying to get in this position, the market may go in the opposite position because it doesn't want to pay a lot of people. See what I'm saying? Like, let me show you this for an example. Because you say you understand, you say you got a concept of the puts and calls. So now we're on, let me do a better one. Give me 1 second. Okay, perfect. All right, so this one right here is Sundial Growers. Now, as you can see, they're saying that if you were to pick a call, you would be in the red right now. And let's see, they are correct because it is going down. This is actually the asset right here and it's going down. So let's see what the put is saying. So if you pick a put, you would be in the green. You see what I'm saying? Meaning if I am putting in a wager that Sundial is going to go down or is it going to be bearish, I will be making money right now. And technically that is the case because we do see nothing but red right now. So it is going down. So you just want to pay attention to that And sometimes the market likes to look and say, okay, well, I only have in volume 382 people that have bought these put contracts. But now if I go to the call, it's 44,000 people. I mean, 4,400 people. You see what I'm saying? So if you yourself, man, was the market and you have to pay people, who would you rather pay? Would you rather pay 4,400 people or would you rather pay 380 people?
380.
See what I'm saying? And the market, because it's computerized, has all of our orders that we decide, all of our trades, all of our buys and all of our sales. So the algorithm of all of the markets combined and brokerages combined know, okay, you know what? If I take this asset down 2-3 cents, I may get a couple of people to jump out because that's going to go past that 20 and 30%. You see what I'm saying? So that's their stop loss. So it's going to kick them out. So sometimes you got to watch it even when having your stop loss, because the market may try and manipulate and try and go a little bit past the traditional stop loss percentages for most people, which is 10, 20, and 30%. You know what I'm saying? Just to get them out the way. And then because they're going to sell. And then after they sold, of course, they're going to go back and be like, what? It's going up now? Damn. You feel what I'm saying? So there's definitely some manipulation going on. And you got to kind of have that skeptical eye a little bit about it. And I just want to make sure I just kind of bring that up to you and use that as an example. Let's see. And accepting responsibility is really big. What do you think about that one, brother?
That's also a really big one too. I feel like if you can accept your losses and learn from it,
right?
Like even though you lost, that's still like fighting back. That's still gaining more knowledge.
Right.
So you don't go through the same process and lose more profits.
Yes. No, you are totally correct. Yes. And then of course, on the flip side, when there's something positive, meaning that you've profited, how does it feel to know, like you've already experienced it because you had a couple of trades? How did it feel when you were profitable?
It felt good.
Felt like good. You know what I'm saying? Yeah. Especially when you're like, you know what? I looked up this by myself. I chose this by myself. I pressed the buttons. You know what I'm saying? You did everything to be profitable on yourself. How much confidence is that? You know what I'm saying?
Yeah.
That's big. So it swings both ways as far as accepting responsibility. I like how you pointed it out. That was very positive. If we happen to take a loss, yes, I lost. It was me. I'm going to go back now and check and see what's going on and see where I can get better. You know what I'm saying? And then also on the flip side, if you're profitable, you're just sitting back like, man, I just did that. That was me. You know, that was me. I did that. And it helps you build and it helps you be more confident in this space because say like the example I was talking about where I made $11,000. Now, I had to put up $1,900. You see what I'm saying? In that investment. So I invested $1,900, but how confident do I have to be as an investor or as a trader to invest $1,900?
Very confident.
You know what I'm saying? Very confident because that's for the average person. That's like a whole month's worth of salary. You know what I'm saying? That I was like, you know what? I feel real good about this. I've done my due diligence. I'm going for it. I'm putting it in there. You know what I'm saying? So that's where accepting responsibility really helps out as far as your confidence. And once your confidence gets higher, your percentages, the percentages will always be the same, but the amount of money that you will make will be different because you feel more confident now putting in a couple of hundred, a couple of thousand. You see what I'm saying?
Yes.
Versus like, let me just put this little $20 in here real quick and let me sell it. You know what I'm saying? Which I've seen $20, you know what I'm saying? I've seen $20 go from, I bought 21 contracts at $1 a piece. And I've seen $21 go all the way up to like $450. You know what I'm saying? So is it possible? It is. Is it very random? It is. It's not an everyday thing. You know what I'm saying? So I don't want you to think that, but I also don't want you to think $20 can't go a long way. You see what I'm saying? But imagine if I would have put 2,100 up. Haha. See what I'm saying?
Yes.
Now I would have went to possibly almost maybe 45,000. Almost, yeah, either 45,000 or 45. No, yeah, because 4,500 would have just be doubling my money, and $21 doubling is only 42. It went all the way up to 450. So right, 20. If I'd have put in 2,100, that was really technically like my second option contract trade ever. So of course I wasn't confident, but if I was and I used the same percentages, I'd have put 2,100 bucks in there, brother, and I'd have got $45,000. You know what I'm saying? So, right, the percentages don't change. You know, you put $1 in. If you get 10% on that dollar, that's going to be $1.10. You made 10 cents. Same thing if you put $1,000 in and you make that 10%, that's $100. So the percentages don't change. What changes is a person's confidence and what they're willing to invest to watch grow. See what I'm saying?
Yes.
All right, perfect. Let's see. I think you kind of covered it already. Stop trading. I think you said you had a moment to where you had lost and you just stepped back and was like, you know what? Let me just evaluate this is the right thing. That's what I did. I'm a very I can be a risky person. It's my sign. I'm a fire sign. I'm an Aries. So I could be very risky sometimes. So initially to get in, I was learning about this space. I put $12,000 in. I'm like, forget it. You know what I'm saying? I'm about to learn this. You know what I'm saying? I'm about to get this money. I got a decent amount you know what I'm saying, to trade with. And sure enough, I literally worked that 12,000 like down to $3,000 learning. You know what I'm saying? I had to learn. You know what I'm saying? I had to learn. I didn't have necessarily somebody like myself to just throw questions back and forth and, you know, see if I'm doing something right or wrong or just kind of give their opinion. I was just out there, me and my brother. So I had to pay to learn, basically, you know, and I did learn. I learned really fast too. So that right there, man, is definitely important. Once I lost that about $9,000, I had to step back for a little bit. Like, hold on now. You know, obviously something's not working. You know what I'm saying? So I had to stop trading for a while. I actually just kind of, for like a week, almost like a week or two, just almost didn't really just cut. I didn't even cut my computer on. I was just, you know what I'm saying? Like, let me just kind of back away for a little bit, get my mind free of that. So when I come back to this space, my emotions aren't really focused on that $9,000 that I lost versus my emotions are focusing on getting better. You know what I'm saying? So definitely that, man. And just the last thing, what I did do after I lost that amount, because I was trading with $1,000, $2,000, and I didn't know what I was doing, brother. You know what I'm saying? So that wasn't really a good thing. Smart. So I had to, of course, the next thing we talk about is to trade at a lower amount. You know what I'm saying? I had to get back in, find some lower amounts, $100, $50, you know what I'm saying, and start getting in those and let my account build back up to where I did actually get my account back up to over 12,000, which was really good. So just keep that in mind, man. If you have a strategy, if you have some fundamentals and they're really solid, you will be more profitable than you lose, but there will be losses. I don't want to lie and sit here and say, hey, bro, you're going to get in this and you're never going to lose. You're never going to lose big. None of that. It's never going to happen. I don't want to say that versus say, hey, if it happens, I want you to understand a couple of rules that'll help you so you can move past it, because sometimes big losses or losses can really weigh on us and we can't move past it. like the video was saying, some people lose and never get back in trading ever again. You know what I'm saying? So that's the thing I just want you to understand. Also, because I know we're getting down to the 10 o'clock, and I think you got like a job or something like that, brother, right?
Yes.
All right, congratulations on that. And I definitely don't want you to be late. If you can write down this website right here, if you already haven't signed up for it, it's called tradingview.com. And that's so you can sign up for a free subscription. And now you have the opportunity for all of your investments. You can always watch them every day. You can check on them a little bit. You can spend 30 minutes, you can spend an hour, whatever you have. If you're already invested in something long-term, I would definitely suggest, spend a couple of minutes a day just checking it out. You know what I'm saying? And this is cool because you can look up, like right here, I got stocks, but I can also click on my watch list, and I also can look at cryptos. I also can go over here to the pound, to what is it? GPY? Okay, yes. GPY, or is it JP? Where is it at? Please forgive me, brother. Okay, yeah, here it goes. So this is one of the Forex currencies right here. So if you wanted to look up a currency, you know what I'm saying? You can look up a Forex currency. Like you can look up pretty much any asset on this particular website, from foreign exchange currencies to cryptocurrencies to stocks. You know what I'm saying? So this is a one-stop shop for your charts. It's free. Definitely take some time, set it up, get your free account, and just look at some different charts and look at some different assets and see what's going on. The next thing I wanted to encourage that you sign up for, I know you've already done some real trading and made some real money, but I would like to encourage you to still maybe think about the Thinkorswim with TD Ameritrade. I don't know if you ever heard about that before. It's called Think or Swim. And what that is, it allows you to set up a free account with TD Ameritrade's Thinkorswim. And then what it does is it allows you to paper trade, meaning it'll give you like a couple of thousand or a couple of 100,000 worth of computer money or paper money. And you can still use the stock market's live price action and real assets to buy and sell and trade contracts. But of course, if you win or you lose, it's no sweat off your back because it's paper money. See what I'm saying?
Yes.
So maybe to kind of like, not to tell you to not do any more real trades, but maybe in between your real trades, get some practice trades in, you know what I'm saying? And just get more and more comfortable with the whole entire space, and get comfortable not losing any money versus how I did. I unfortunately got comfortable losing money. You know what I'm saying? And I don't necessarily want that for you. So that's a wonderful site. Also, it's called Thinkorswim. Sign up for that. It's also free, and get some trades in. And also, here's a couple of places if you're in the stocks to go get information from. Zach Investments research is really good. This is where I went, really, so you can go and Google it yourself. I went here, the top 10 places to research stocks. And then, of course, I went to all these different platforms right here, and they provided me with the information. So when you're looking for, catalyst for a stock, if you're trying to research whether or not to get in it or to get out of it, if it's a good one or it's a bad one, these are all your different places of research that you want to go to and look for information. that's going to either help you decide to sell or to buy, to be honest. So definitely, if you can Google that and pick a couple of those places, that'll be wonderful. And as for today, because it is 9:59, we'll go ahead and stop. And let's see.